Well, we've got Bitcoin mooning as we look towards 100,000. Will we get there with markets very much overbought at the moment? We have a look at the US dollar, which at the moment is trending like an absolute beautiful thing it is. Gold's going the opposite direction and getting taken downtown, and we'll look at whether that trend can continue in the short term. We are seeing equity markets consolidate with the S&P around that sort of 6,000 level as we look ahead at NVIDIA's earnings next week. We also see the ripples that continue to fall out from Trump 2.0, and markets evolve, as do we as traders, and it's time to get in front of the screens. It's a trade-off. Well, hello, I'm Chris Weston from Pepperstone, and I am joined by Blake Morrow from Forex Analytics, and we were discussing all the factors that are going on in this crazy markets, the technicals, the flows, the movers and shakers, and we discuss where effectively we see the direction of travel or the likelihood of the direction of travel going forward, obviously the risks that come around with that, some of the fundamental kickers that are evolving in these markets. Mr. Blake Morrow, how goes it, my good sir?
Hey, good to see you, Chris. I love your hair. It looks very similar to mine.
It's different directions, isn't it? I think the wind's blowing in different directions in Arizona relative to Melbourne. So yeah, different parts of the world, different directions. But good to see you, mate. I think there's obviously a lot going on. I think there's been some really big trends playing through in markets which may or may not continue to kick. I'd like to discuss those with you because, you know, following that flow of capital, the aggregation of all those flows and trying to get that directional skew into your favour is something that you know, obviously we're looking at very closely at the moment. Obviously, we're still trading the aftermath of Trump 2.2, and obviously, as we're seeing Trump implement his key cabinet appointments, I think that's obviously what we're watching at the moment, and markets still evolving on that situation. So let's go into that and discuss in Topical Thunder. I talked about trends, Blake. You know, the dollar right now, the epitome of trend. You know, you've got the dollar index at 106.50, 12-month highs, euro dollar 105.60 or so. You know, that's breaking down. Aussie dollar's hitting key levels, but it's trending. You know, you've got gold. Gold's breaking that uptrend and is actually starting to make lower lows and high lower lows and lower highs as well. You're seeing that situation playing through. So, you know, gold looks like it's hit a short-term trend lower. You know, for me, the risks are slightly lower. Yeah, Bitcoin's been absolutely going for it. I mean, we got to about 94,000, and yeah, some of the other things like Doge was up about 115% at one stage. Obviously, you can't really compare Doge to a lot of the other markets because of liquidity and various factors. But yeah, some beautiful trends in the crypto scene. You know, equity markets have been in a long-term uptrend for a long time, but we're seeing some consolidation. Obviously, Tesla had a big move, but yeah, some really strong trends, certainly in G10FX at the moment, and dollar CNH as well. But you know, and that's where I've been sort of concentrating a lot of my efforts at the moment. But trending markets, you know, you got to respect the trends. I know some of them are pretty mature at the moment, and that causes some anxiety, and people look to counter it. But for me, trends are there to respect, right?
No, and I agree with that, Chris. And God, can we jump in the next topic already? No, I don't want to do that just yet. But they all go together. It's funny when we were putting together this show, and you gave your topics and I gave mine, and I'm like, oh, this is perfect that we're talking about this. But yeah, I mean, you see, I think for me, I'm pretty much a currency guy. I mean, I that's where I trade 95% of the time. And the dollar, you know, it's a trending beast right now, and it is just you can see the breakdown in the euro even after the inflation data that the U.S. had. I mean, yeah, granted, it was in line with expectations. People started fading it automatically, and then all of a sudden it just came roaring back within 15 minutes, maybe 20 minutes after the data came out, and upended to the euro, and the euro broke through 106. And that is a real good example of a trending market when you would think the opposite is happening and it starts to develop, and all of a sudden it just reverses. And the same thing with the we talk about the US dollar Japanese yen. I mean, the US dollar Japanese yen was probing 155 or getting close to it yesterday. It looked like it was a false breakout, and then by the end of today in our trading session, in the North American trading session, you know, we closed well above 155, close to 155.50. So these dollar trends are definitely in play.
Dollar
Gold,
CNH as well.
out,
Dollar
like
CNH. I mean, I think
what's that?
I think dollar CNH is a really interesting one because, the PBOC and its fixing mechanism have the chance now to push back on this, and they're not doing it. They're fixing line with that, and they're basically saying we tolerate a weaker yuan. And I think, we all think about the US dollar, which is a magical currency right now. You've got momentum, you've got carry, you've got Trump tariff risk impending, fiscal risk impending. It's all working concurrently. But then you've also got the Chinese situation where they're not pushing back on the yuan weakness. And as dollar CNH is moving up, I think that dollar strength is also resonating back into dollar strength in G10 as well. I mean, don't you think?
I agree with that. And actually, technically the dollar CNH has this inverted head and shoulder pattern that's beautiful. Still has further to go despite what China may or may not do as far as pulling their levers. But you're right, it feeds right into the dollar strength. So that brings us to really, Chris, the next topic. And because I know you talk to traders all the time, and I know the way you trade with the trend.
Yeah.
But I'll tell you, in my experience of spending over 20 years with retail traders, and even the way that I trade, a lot of people like to fade trends. They see trends that in your own words, they get rather mature. And all of a sudden, I was listening to this podcast earlier as I was doing analysis about this one trader that's pretty well known. And he's like, yeah, everything looks pretty crowded. I'm looking to fade it. It's like, whoa. Is it too early to be fading some of these trends yet? I mean, I look at Bitcoin. Yeah, Bitcoin's nearing 100,000. We've talked about the cup and handle. That cup and handle target is 103,000. But the question you have to ask, can it go farther? Can it go further than that? I mean, like, I don't want to stand in the way of it. But then you have the dollar, and people are like, well, which we're going to debate in a little bit about the dollar. But there's arguments in both directions there. My question to you, Chris, is, as we see these trends really develop, and we haven't seen, yes, we're seeing some appointments from the Trump administration. We have not gotten word, unless I missed it within the last couple hours of me working and having my head in the computer, working on charts and stuff. Trump hasn't announced Lighthizer as his trade czar yet. I mean,
he will.
So we're well, you think he will. Everybody thinks he will, but it hasn't been formally announced. Regardless, we're waiting for all these appointments, but nothing's happened. They don't take office. He doesn't take office for another couple months. We haven't seen any action yet. So do you fade these moves right now, or are you too early? What are your thoughts here?
Why wouldn't you just let price dictate that situation? You said earlier that the dollar's come down. The CPI came out; it was in line. We saw Treasuries yields coming down, and the dollar just rallied straight up. I mean, that tells me there's still a lot of buyers out there. Now, I think that the Trump administration is still key. I mean, that's where we are at the moment. It's appointing a lot of people, and we're looking for Lighthizer confirmation. I mean, that's a very powerful statement that he wants Lighthizer in there, and he's going to go. It just basically says he's going to go really hard on tariffs, and obviously the Treasury sector is just an equally, if not more, important role as well. I mean, there's talk. John Paulson's pulled himself out of that role, and there's Scott Bessent is considered the front runner, and he's come up with some very punchy articles recently, including that he had a strong view on creating a shadow chair role, and therefore, in that year that we go into Jerome Powell's end of term in May 2026, that by creating a shadow chair role, which obviously needs to get blessing of Congress, then you effectively diminish the impetus of Jay Powell. And I mean, that's a really, really important role as well. But I think right now, if the dollar's trending higher, and look at it, dollar yen, bang, dollar Swiss, up she goes. I mean, you're catching a falling knife. Let the price dictate that. I mean, I agree. Everyone loves to and FX is a mean reverting market, more so than any other market out there, or asset class, if you want to call it that. And we do that. But when these trends develop, they can last, especially when you've got these very powerful forces that I talked about. You've got better growth in the US. You've got these fiscal kickers. You've got tariff risk coming through, which I don't think we've even really started to price. I know we have, but we haven't even got to the two-way negotiations yet, which are going to get spicy. You've got relative growth dynamics, rate dynamics working well. So you've got all these factors coming through. The biggest concern I have is positioning. But let price dictate that. If you want to go and fade this market, wait till the price action becomes a bit more sinister and you've got a higher probability of a move. Otherwise, you're just being aggressive and swimming against the tide, in my opinion. So let price. I'm not against countering moves, but You wait for the price to tell you that there's a higher probability. I mean, it's all a probability game, isn't it? And when the market shows you that it's prepared to give up on this, then you've got more bang for your buck. Otherwise, you're hitting a brick wall, in my opinion. Talking about brick walls, let's go to Bitcoin, because it has been the talk of the town. When you're talking about Trump 2.0, red sweep, which we've got confirmation of this morning, and obviously Trump's victory in the presidential election was emphatic. He won the popular vote. He won all seven swing states. He's done far better than most people had anticipated. When we look at the winners from this, crypto obviously been the big winner out of in terms of asset price moves. You can't compare a move in Doge to oil or the Russell. You can't compare a single entity with poor liquidity relative to a basket of diversified stocks. The percentage moves are very different. But Bitcoin's done very well. We've seen names, MicroStrategy, Michael Saylor buying 20-odd thousand coins through the election cycle, $2 billion of notional. The inflows into ETFs have been staggering. Certainly on a couple of days after the election, we saw them, and they've been really well correlated with Bitcoin returns as well. There's a whole number of factors, but it's turned into sort of a brave, buying for the brave turned into an out and out momentum move and a FOMO chase up to 94,000. So the question now is it's pretty overbought. Would you chase now, Blake, or would you fade it? How are you playing this? You sort of see it skewing that this goes over 100,000. How do you see it playing out?
I'm going to say no, and that's FNO. I'm not fading anything. Actually, I like Bitcoin on any dip to 80,000. Obviously, any dip to 74,000, which I think would be a gift. Even 84,000 is a level I think that is worth noting in this very strong bullish run. As we pointed out here on the trade-off over the course of the last couple of years, I'm going to say we have both, you and I, Chris, we've targeted that, hey, that cup and handle pattern takes us to 100,000 eventually. I have it at 103. I do think it can actually go past that. So to answer your question, heck no, I wouldn't be fading it. Does that mean I chase it? No, I think there will be two-way price action around. I think that's
levels. Where we are. The band's been pulled now. It has been pulled so far that you are going to get different opinions playing through. But I think I still like this higher. But I'd be waiting for a bit of a position flush out, get a cleaner structure. I mean, there's other factors as well. We know that Gary Gensler is going to be replaced as the head of the SEC, and he's run a very, very tight regime on the crypto scene. Now, it doesn't mean that the new SEC chair, whoever comes in, is going to let the party just completely crumble and poor discipline. Of course, that's not going to happen. But whoever comes in is going to have a very sympathetic view towards the crypto scene and the evolution that comes through. That's going to have big implications for stable coins, Bitcoin. I think that's a big kicker as well. I don't know whether Trump's going to actually create a big Bitcoin reserve. But certainly the regulatory regime is going to become more favourable for crypto as a project. And I think that's a huge tailwind coming forward, as well as the ETF flows and the institutional adoption that we're clearly seeing. So I think you wait for that position after a really nice move up, let some of the hands take their profit, come to a cleaner structure, and I think people will buy into that pullback.
Chris, I do want to shift gears into our last subject, but before I do, I just want to make one comment that I was reminded of today regarding Bitcoin. And if you guys are crypto lovers, don't hate me. I'm just repeating something that somebody came to me and said. They reminded me that the Tulip Mania, they believe, was 17 years. So with that being said, look, I do transactions in Bitcoin and Ethereum. So I know it works, and I think it's been woven into the fabric of Wall Street. So I don't think it's going anywhere. But I was gently reminded that today. I was like, good thing. Yeah, and
not everyone was around for the Tulip Mania, mate. You might have been, but
I'm close. I'm close. I'm almost fossil material. Yeah. Since I am over the age of 50. All right, let's talk about the U.S. dollar and. The dollar, I do want to talk about this because, President Trump, now President Trump, but went on the campaign trail, both him and J.D. Vance really talked about weakening the dollar. I don't think they have much control at this point. But as you know, obviously the dollar has been rallying quite substantially. It's trending. It's a yield play. There's not a lot of confidence in treasuries right now. You start looking at the ballooning, fiscal situation and debts and deficit that we have, and the repayment that we're going to make, and there, and how much fixed income is going to be hitting the market, and what are they going to have to sell, and so yields keep going up. The dollar is sympathetic to that. But at some point, there's going to have to be, if the Trump administration truly wants a weaker dollar because they want to bring in manufacturing, they want to use tariffs as, and everybody's saying, tariffs, it's going to bring in all these revenues. But are they using it as a more of a negotiating tactic and ploy? And will they get companies just to build manufacturing plants in the U.S.? And if they do, and then that has to be shipped out, they're going to need a weaker dollar. It's going to be really tricky.
It's going to be balanced. I don't know how they're going to do it, mate, to be honest. It's going to be impossible.
I don't know either. And the numbers don't make sense to me. So, that's where I stand right now. I mean, obviously we have to go with the flow, and yes, the dollar is strong. And yes, I think we need to ride that out as far as it goes. And like I said, if bonds really implode, yields are going to really rip. But how do you feel about the dollar? Because I could argue both directions.
I think the risks are still skewed to the upside. But I mean, at the end of the day, I want the moon on the stick, and I'm not going to get it, to be honest. So, what they want on the dollar. I mean, look, we got to come down. Again, it comes down to the Treasury Secretary. I mean, I was hoping John Paulson would get the gig. I think a lot of people on Wall Street would have done. He's one of the biggest hedge fund managers out there. Markets want to see the Treasury Secretary come in and who's managed money. I mean, that's a beautiful thing to have. He's pulled himself out of the race. So Scott Bessent could, or whoever comes in, could be an interesting one. But I think the Treasury Secretary could have some influence on that dollar view. And, Trump will obviously make sure that pick comes in as it seems. But, yeah, I mean, I think right now, the fiscal situation... Yeah, I think fiscal is probably more of a 2026 story than 2025. The Tax Cuts and Jobs Act, that doesn't really get renegotiated or passed until right at the end of next year. A lot of those factors. And I know the bond market is more forward-looking than any other asset class. We don't necessarily look 6-12 months ahead like you would do in the dollar or equity markets. You are looking 5 years ahead, or whatever the tenure or the maturity on the bond is. That's what you're looking at. So, we will look at 2026 and look at that. But let's also not forget that the Treasury Department is amazingly well funded at the moment. We've seen that in the quarterly refunding announcements. They don't need to do much in the way of financing next year. It's going to be 2026 where they have to come out to market, increase coupon issuance, and maybe the market starts front running that issue. But right now the Treasury have got a shitload of cash. They don't need to worry about raising cash anytime soon or issuing corporate Treasury issuance. And the fiscal story is more of a 2026. So it may limit the upside in yields. But for me, one of the big risks is the idea that we are going to see a further backup in term premium, which sits at 22 basis points. But if term premium's going up, we get real rates moving up, I think that will become more of a negative story for equity markets. We're not worried about it yet, but I think it would do. And I think that would also continue to see the US dollar propel higher. So that's probably one of the big risks that we're looking out there for. But for me, fiscal's a 2026 story. Whether the market front runs that is another factor. So we'll see. Anyway, let's go to the technical.
We need more than 3 minutes.
We
need more than 3 minutes.
Keep it coming. We're going to do a side hustle, just talking markets for hours. Anyway, let's head to the technicals that matter. That's a setup. Right, Blake's been busy away putting his head in the computer, as he says, with the charts. But the charts do matter, and when we look at these things, they give us a really clear understanding of the aggregation of flow, supply, demand, and where the balance of risks and probabilities sit. Let's have a look at Bitcoin first of all, because I'm not one to go and trade off an RSI, to be honest. RSI is generally a pretty good momentum tool. They tell you something's going up or going down, which you can see from the chart anyway. But when you see something like that, it does tell me that the risk reward is shifting, and I wouldn't necessarily be shorting because the RSI is at extreme levels, but it does tell me that perhaps you want to stop, not chase at these levels, and wait for some of that heat to come out, and buy back when you get a much more cleaner structure. And I think there has been a large degree of chase. A lot of this has been ETF based, and money's gone into the the returns have correlated with the huge inflows we've been seeing. But there's a lot of other factors that have been played. The optionalities come through. People have been buying upside calls. Dealers have had to hedge through the futures, which have pushed prices higher. There's been a big chase playing through, and I don't think we've seen ultimate euphoria yet. But I do think the market is loving Bitcoin right now, and I think some of that heat needs to come out and coincide with what we've been seeing. I couldn't give you a level, but I think as long as the price is holding that 5-day exponential, I'd probably be using that as a guide to average into new long positions. I think that's what you want to see when you get a really strong impulsive move up. Generally, it's one of these short-term moving averages, the EMAs, which contain that. So for me, as long as that EMA is being respected and people are buying it, and you see a daily close above that, I'd be using that as a guide to average into new long positions.
That's a great point, Chris. And remember, overbought can become more overbought. So just always.
Well, it just stays overbought. But I think it does play into your. I wouldn't be fighting it, and I certainly wouldn't be using the RSI in a I like using the RSI. In a mean, in a sideways trading market, 50 on the Bollinger Bands, and you can trade that mean reversion quite nicely. But for me, it's a sign that it's just strong, and you can see that from the chart.
Yeah,
anyway.
Right. It sure is. So, Chris, I'm gonna actually turn your attention, or everybody's attention, to the dollar yen, which is one that I actually tried to fade it ahead of the election when it got towards that 200 DMA, and I traded it on the wrong side. I got stopped out of it, and that does happen when you trade. There are trades that you get right and trades that you get wrong. Well, this dollar yen, this is really proving to everybody that the move is still higher. And I think this very strong ascending channel is worth noting. I do think this is a setup, and I think the breakout above the 154.70 level was a big breakout. That's that horizontal line. That's where we closed above today. And I think it can still extend its gains higher. And I think the US dollar still has further to go, the US dollar, Japanese yen, unless we start getting rumblings from the Ministry of Finance or the Bank of Japan, and we they start talking about excessive moves. But remember, we're talking about the dollar yen. If you look at currencies like the Aussie yen or New Zealand yen, they're kind of sideways. Anyway, below channel support, which comes in right around 150, let's just call it even, like 154, 154.20, right around there. That's when I get a little worried about longs, but while we're above that, you got to respect the upside trend. But I do think that if there is some official language that comes out from Asia, the Bank of Japan or Ministry of Finance, starts poking and prodding, we could see some corrections here. But for right now, we have to be very respectful of this ascending channel.
Give me 157.32, and that's the level I want to look. I mean, I don't think we've got Ministry of Finance just yet, but it's always the rate of change. But I think that 78.6 is a level that I'm looking at. We'll see our price out. If it gets there, you start getting a really big stretch position. I'll be looking at countering moves there, but obviously, again, price dictates that. So, interesting chart. Dollar yen, beast mode, flying. It goes down, it comes straight back up again. Anyway, that's where we are. Let's have a look at the Aussie dollar, because I'm saying this right now before the Aussie employment numbers that come out in about an hour or so's time. Not really too sure how that's going to be taken, because, at the end of the day, domestic data is not really a big issue. Look, we know the RBA aren't going to raise rates or cut rates anytime soon. The swaps market are not expecting the RBA to really do anything until May or July of next year. They're very much. It'd be a nice position for Governor Bullock to be in, getting paid a ton of money not to do anything. I mean, that's a lovely position for any central bank to be in. But look, it's not really about domestic issues. The rates market is supporting to an extent versus some of the crosses. But this is an outright one. It's a US dollar play. It's just getting caught up in the US dollar malaise that we've been seeing. But also, there's other factors at play. The Chinese yuan is weakening off now, and the PBA seem somewhat okay with their depreciation as tariffs come in, and so a weaker yuan is negative for the Aussie as well by extension. Chinese and Hong Kong equity markets are looking quite fragile, and again that plays into Aussie dollar as a proxy. But we are testing those August lows, big levels there, where we saw that massive bounce playing through. Will we see it again? I'm not so sure. Right now, we've got ranges expanding. The dollar's up. It needs to bounce. It needs to kick off this level, but a daily close below this level, below those lows. And for me, that just accelerates the selling.
Ooh, man, it looks scary, Chris, because I don't think we're gonna see. Well, hell, I'm not even gonna say anything. It just looks scary. If you're long, it's
Well,
definitely.
I just think at the end of the day, like, the shit that's going on between China and the US hasn't even started yet. At the moment, we're just in phase one, which is just Trump putting his key personnel in place. When we go into the 20th of January and we get the first 100 days, and that's when we start seeing things kick in. And tariffs are going to be the first thing that he goes for. And if Lighthizer comes in, he's not going to be messing around. He wants to go hard and he wants to go quick from that position of power that they've got. And I think that two-way political brinkmanship we're going to be seeing between the two entities is not priced in. It's going to get nasty, and it's all going to come through on Twitter, and it's all going to be the way that we consume news and react to news is going to change, and I think that's going to make China ugly. They're going to come out with fiscal, and they save their powder dry for that moment. They'll weaken their currency, and I think the Aussie's going to get punished on the back of that.
Ooh, gosh, it's going to be interesting next year, Chris. You know what might also be interesting is my fourth setup, which is crude oil. Crude looks like it might actually hit an oil slick here.
Oh.
And hey, look at me go.
It's like Michael Brown. Michael Brown's always
day.
banging on about gold losing its shine. Come on, man, for God's sake.
The reason why I bring this up is crude oil is trading rather weak. And you can see all the support levels that are below. And frankly, we start getting below the $60 mark, and there's a lot of open air in crude. And, there's a lot of factors that are driving crude, but a lot of them, maybe people don't think about. There's been a big buildup in positions and long crude positions, based on geopolitical risk. But if you believe that President Trump is more of a peacemaker, he wants to, really take care of what's happening in Israel and over in Ukraine, and those start to die down and go away, and then you have more supply coming online, and then quite possibly a more contentious global trade environment, but slower growth globally. Crude oil might be reflected, and it might actually suggest that is happening. So watch below $62. We start getting below. You have your first level supports, that first teal line that comes in around 66, roughly 66 and change. Below that's like 62 and change, and below that, the downside could really open, and we could really fall on the oil slick. Chris.
Yeah, well, I think this idea that they're going to increase production in the US by another 3 million barrels is crazy. I mean, they're already producing 13.4 million record numbers. The petroleum company's going to be asked to get more out of the ground. Trump's going to come in. He's appointing a Ukraine czar, to try and create peace between them. And if there was peace between Russia and Ukraine, big if, of course. Does Europe release the shackles of constraints on Russian supply? And so there's the oil market is well worth watching. But I agree. When you're talking about all these moving parts I've just talked about, sometimes it's easier just let the market tell you what's happening, and that means respecting the price action, the technicals, right? You can come out and look at all these kind of weird and wacky things that come through in the oil market, inventory levels, and what does supply, the OPEC coming out or International Energy Agency downgrading demand. Just let the market tell you what they're thinking. Work on the probabilities, which is why the technicals are obviously so important there. Amen to technicals. Anyway, let's go to play of the day. I'm going to go for gold, and I'm going to lose a lot of friends. You're going to see the followers at the moment just completely drop off because everyone loves a bit of gold. But I love gold, and I think you just trade what you see, to be honest. I think that's the difference between a trader and investor. You can't fall in love with something and in the markets. And right now, I love gold on the way up. And right now, I trade what I see. And right now, the price is lower. I think gold goes lower, to be honest. I mean, we saw that the October lows come in 26.05. It messed around. We saw a little bit of technical support, but then it bang, just goes down. Again, you got that 5-day exponential moving average just defining the move lower. Now, on that way up, we did see gold and Bitcoin working concurrently, and gold was working up in a stronger dollar in a rising rates environment. People were saying, it's debasement trade. It's this idea of fiscal deficits and recklessness and a hedge against that. Well, Bitcoin continues to soldier on, and gold's done the opposite way. So that relationship with high real rates, the inverse relationship we've got with the US dollar has begun to bite, and you've got a massively overcrowded position which is being liquidated. The problem with liquidations of positionings is when they start to trend lower, then you get all the CTAs and the systematic guys following that, and they've reduced length, and they haven't flipped to outright short, but maybe that comes. But right now, there's a trend which is going lower. Rallies are being sold, and I need to respect that. So it's not about being in love with a position, either bullish or bearish. It's just trading the price action with what we're seeing. And right now, on the higher time frames, this is lower, and I think this continues to go down. So pick a price target. I just hold it until the price tells me to get out.
You know, Chris, a couple of weeks ago, I had gold as either a setup or my play of the day, and I can't remember. And I said, hey, channel support is at 25.50. We're almost there. And I was just pulling up my chart that I use for this show. And the scary thing is, if we break that channel, you guys could probably go back 2 weeks and watch our trade-off show. Then it gets even crazier. Then you start seeing some of those lower horizontal lines that Chris is pointing out. So,
yeah, well, I think last week for me was I was short Europe, long US, and that I'm still in that position. I think that's working well. I think Buy America still seems to be working, although in the US equity market, as we look towards NVIDIA next week, you are seeing a bit of consolidation, a bit of fatigue, but it is outperforming the US European markets, and I continue to think that's going to be the right way.
All right. Well, I'm going to bring up my play of the day, which is something I do not own, but I've been talking a lot about it today. This is the US dollar Swedish krona, and this is one that kind of falls off the radar sometimes, not one of those majors that people like to trade, but it is a currency pair I do like to trade. And we just came off the Riksbank a couple of weeks back, and we're probing this channel. And by the way, this channel has been in existence, let me just make sure I get my dates correct, since basically September of 2022. You can see a horizontal breakpoint that comes in around 1107. And I'm basically looking for a breakout above 11. And when I get into trades like this, Chris, I start small on a breakout, breaks another level, I add because I know there's momentum above it. And then, like above 1107, then you're starting to target the 127% extension at 11 that comes in 1133. And then you start targeting the all-time or, multi-decade highs that come in around 1151. So what I try to do on a momentum play like this is start small, but add on breakouts where
get the pyramids going on.
Yeah, well, you're building this position into momentum, and because as it breaks levels, more momentum is coming into the market, and when you have the dollar strength behind you, as long as the dollar continues to trend, and let's say the euro's trading 105 or below, this US dollar Swedish krona could probably be trading at 1120, 1130, in fairly short order. So I think I'll be looking at this one because on a breakout, you don't have to risk a whole lot. You just risk back below that channel.
And I have clients who sit there and go, I don't want to trade dollar stocky because spreads are slightly wider than euro dollar. But you know what? You get a bigger percentage move, and the lower liquidity in that gives you that bigger, that higher beta play. So you pay a little bit more on the spread. But the potential, if you get the trade right, you're going to make a lot more on dollar stocky than you are on euro dollar, right?
Correct.
That's the way it's worked. So it's a higher risk tolerance. So that also pays into what you're doing there as well. So it really depends on your trading strategy. If you're scalping, then obviously that's a different factor. But if you're trading the swings, dollar stocky is a great one because when they go, they can have big old moves. Anyway, lots going on. I want to talk about dollar Swiss because we've got Swiss CPI number, and I think that in the session that could be really important as well because when we get the next SNB meeting coming through in December, there's a line ball call whether they go 25 or 50 basis points in terms of cuts. So that could be one to watch as well as we're seeing a weakening Swiss franc playing through. But a lot going on. We've talked about the potential downtrend in gold, what's happening in Bitcoin, what's happening in the dollar, what's happening in equities. There's a lot going on in markets at the moment. They evolve. So do we. We'd love to see your comments. Love to see how you're trading the financial markets. So click the like button, tell your friends and family about the show, and subscribe where you can. See you next week for more of the trade-off.